Good day to you all. My name is George Kamau. I am a senior portfolio manager at ICEA Lion Asset Management, and today I have the pleasure to actually take you through the ICEA Lion Fixed Income Fund. The ICEA Lion Fixed Income Fund was initially known as the ICEA Lion Bond Fund, and in line with the current regulations, we did change the name of the fund from ICEA Lion Bond Fund to ICEA Lion Fixed Income Fund. The ICEA Lion Fixed Income Fund is a collective investment scheme that is regulated by the Capital Markets Authority, and as a CIS, it pulls money from investors and invests this money communally. It is structured as a unit trust, and therefore it does prescribe to certain regulations or rules that have been set in place by the Capital Markets Authority. The objective of the ICEA Lion Fixed Income Fund is capital growth and income generation within what we'd consider to be moderate investment risks, and this is done from a wide range of fixed income instruments. It is slightly different from the money market fund in that the ICEA Lion Fixed Income Fund is tailored for investors who are looking for slightly longer dated investments, as opposed to money market, whereby liquidity is the main driver for the investments in the ICEA Lion Money Market Fund. For the ICEA Lion Fixed Income Fund, the main service providers are ICEA Lion Asset Management, who are the investment managers for the scheme. A Standard Chartered Bank is the custodian to the fund, while KCB Trust Services are the trustees of the scheme. As being the trustees of the scheme, it means that they ensure that all the investments of the fund are done in compliance with the capital markets regulations. The ICEA Lion Fixed Income Fund invests primarily in fixed income instruments, and when we talk of fixed income instruments, we are talking of treasury bills, we are talking of treasury bonds, we are talking of commercial papers, we are talking of T-bills, we are also talking of money market instruments. Now, a big question that investors would have is my capital guaranteed? Whereas the ICEA Lion Fixed Income Fund does not purport to guarantee capital, it does work in a very big way to preserve the capital invested in the fund. And how is this achieved? This is achieved through investments in what we consider to be low risk investments. And as I've mentioned, most of the investments done by the fund are in government treasuries. That's your treasury bills, your treasury bonds, with a particular inclination towards infrastructure bonds, which are tax exempt. And as such, this carry with them a very minimal risk. And as such, from the nature of the investments, to a very large extent, investors' capital is preserved. As an investor in the ICEA Lion Fixed Income Fund, you are entitled, or you will receive, a monthly statement. And in this monthly statement, it gives you the number of units you hold in the trust, and also gives you the price of each unit. And from that, you are in a position to actually track your investments. You are able to look at the investments, see how your investments are growing over time, and also enable you to align yourself or align your investments in terms of your actual needs as far as cash management is concerned. When it comes to withdrawing or recalling your monies or your investments from the income fund, it's as easy as filling out a withdrawal form, and within 1 to 3 working days, the money has been credited to your account. And as such, one of the biggest benefits that the fixed income fund does offer you is that liquidity aspect, the fact that you are able to withdraw your money within a short time period. The fund does charge a management fee, and the management fee is 2%. There are no entry fees when joining the fund. There are also no exit fees when you're redeeming or withdrawing from the fund. And every day, the fund does publish the price of its units, which are net of the fees that have been deducted. And as such, on a daily basis, you get what we call the net asset value from the unit price, and you are able to monitor and follow up on your investment valuations. A big question that investors may ask themselves, from the nature or the investments that the fund does, why would one consider investing in the fixed income fund as opposed to going directly and buying treasury bonds? And the simple and fast quick answer to that is liquidity. When you purchase or you acquire a treasury bond directly, you are locked in terms of the tenor of the investment, and if you are looking to actually get out or liquidate your investment, you actually have to go and get a buyer for the security that you are holding. Whereas in the fixed income fund, you will just sell or redeem your units in the fund, sell your units back to the fund. Secondly, when you acquire treasury bonds directly, one of the things that you have to be prepared for is that the interest or coupon from this is paid every 6 months. Whereas when you are in the fixed income fund, what happens is that you receive a regular update in terms of the valuation of the price of your investment, and if you do require cash, all you'll need to do is redeem part or your whole holding in the fund, and therefore you don't necessarily have to wait for 6 months to actually get a bit of liquidity or cash into you. Thirdly, the fund does offer you diversification. If you're looking to invest in treasury bonds, you'd end up buying 1 or 2 treasury bonds owing to the huge investment capital that is required. Whereas in the fixed income fund, you are getting exposure to a basket of instruments. You're getting exposure to a basket of government bonds, treasury bills, money market. And by doing so, you are getting diversification, diversifying your risk out. Thirdly, or fourth, but not to be belittled, is the amount of money you need to invest in the income fund. With the government bonds, you need a minimum of 50,000. Whereas with the fixed income fund, your requirement is just 500 Kenya shillings. And as you can see, that's a very small amount to start your investment journey. It's basically foregoing your 1 can of Tusker and your investment journey can begin. Whereas with the government bonds, you would require 50,000 to actually get exposure to this. And to top it all off is that with the fixed income fund, the ICEA Lion fixed income fund, you are getting services from highly qualified institutions. We are talking of ICEA Lion Asset Management as your fund manager. We are talking of Standard Chartered Bank as your custodian. We are talking of KCB as your corporate trustees. And in such, you are getting access to some of the top tier investment services providers in the country by investing in the ICEA Lion fixed income fund. When considering investments in the ICEA Lion fixed income fund, it is necessary that you do take a long-term approach to it. It is an investment fund that is geared or structured to offer benefits in the medium to long term, and as such, as an investor, you should be looking to invest at about 6 months or longer, and through that particular investment, then you will reap the best benefits from the scheme. As an investor in a fixed income fund, there are obviously some risks that you need to be aware of. The very top risk is interest rate risk. Whenever interest rates go up, the value of bonds comes down, and as a result, this results in a lower unit price. As a seasoned fund manager, we have in place several structures that enables us to take care or mitigate against this risk. One is that we are a very active manager, and as such are able to adjust the portfolio asset mix as interest rates change. Secondly, we do monitor portfolio duration to ensure that the investments that are done in the fixed income funds also align in terms of our outlook on interest rate movement. Secondly is the credit risk or default risk. This is the risk that an entity may fail to pay interest or capital when it falls due. As a fund manager, we have mitigated against this because all our investments go through a very rigorous investment analysis. And as I've mentioned, our biggest exposure is to government securities, which are considered to be zero risk investments. Thirdly is liquidity risk, which as an investment professional is something that you need to manage. And as a unit holder, you want to be assured that when you need your money, the money is available. And to ensure that we are able to mitigate or take care of this, we do manage or we do actually hold a bit of the investments in deposits, which ensures that as and when any investor requires their money, we are in a position to actually fund this investment or fund this withdrawal without necessarily having to sell or liquidate any of the investments, long-term investments that the fund holds. We have seen tremendous growth over the last 4 months, and a big portion of these investments, as I have alluded to, is in government securities, thereby maintaining that risk profile whereby we have low risk exposure with high returns to ensure that we are preserving our investors' returns. In line with the growth that we have seen, the fund has delivered very stellar performance, and a lot of this has been driven by our prudent investments from diversification in the various assets that we hold, as well as our active portfolio management in the fund. And as I wrap up on this, I would like to invite you all to consider investing in the fund. It is a fund that preserves your capital while at the same time giving you a competitive rate of return for the medium and long-term periods. Thank you.